Good morning, traders, and a very happy Thursday out there to everyone. Hope that you all had a nice evening and are all ready for this nice day in front of us here. Should be rather interesting. As we know, we had our bit of a consolidation day up there yesterday. So far we're keeping things moving around a bit here in the Globex session. But just before we go diving into the charts here, just to be aware of as far as the calendar goes for today. We will have unemployment claims and Philly Fed Manufacturing Index for the U.S. both due out at 8:30 there, and then shortly thereafter you'll have at 9:15 just before the opening industrial production and capacity utilization rate. So a couple things in the queue early on this morning to keep in mind there, but we'll certainly just keep an eye and see how the market responds to those data points and what we are left with getting as we get closer towards our opening. So without further ado, we have our daily chart here of this S&P. We know like we said yesterday, we kind of left a bit of a doji bar up there, a tail traded up to 45, 41 and a quarter, and then proceeded to back off and basically closed, not too far off of where we opened there. And then in this Globex session here overnight, we're not working with too much of a large range, but we did have the low from yesterday, which we had at 45.10.75. So all we're doing is just some testing on the other side of the previous day's low there. So we have that going for ourselves as far as the ES goes. What we also might want to take into account or note is that the 5 SMA here on the daily charts is continuing to rise. For now, we're a little bit stretched away from it there. It comes in at 44.78 and change there as far as the 5 SMA. So if we came down and gave ourselves any deeper testing and did come down towards that 5 SMA, would be kind of keeping a watch to see if that little zone is met with any type of buying there. Outside of that, that's really what more or less we're working with. We're trading well inside of the range expansion bar that we had from Tuesday. And then up above, we'll have the previous day's high. But like we said, that remains untested from the overnight session. So just kind of working themselves back on the other side of the previous day's low. And we'll have that 5 SMA continuing to rise. So good extension and good, a little bit of follow through yesterday. And then proceeding to back off just before the end of the day. As we come over here to the hourly displays or the intraday data, it doesn't really matter if you're looking at the 120 minute or the hourly chart because both will show that fact that our slow line in the oscillator has corrected itself all the way back down towards the zero mark. And we can see that we've been obviously putting in that little bit of a lower high there overnight. So what'll be interesting, we do have just in front of that 5 SMA on the daily chart. In case we loosen things up at all, would be kind of keeping a watch 4,500. For one, it's a bit of a round number, but we can also see that that would put us, into the start of some of this low developed regions, but we take it one step at a time there. Does not mean that we have to bolt right down towards that region, and if we did, that would start to bring us to the attention that we might want to start to watch here. The 5 SMA posturing here just for the S&Ps. So the hourly charting combination there with the dailies. If we firmed up and showcased any signs of holding, still that 45 24 and a quarter from Tuesday's high. Served us quite well yesterday. We had put in a lot of work there, so still viewing that as a general point of interest, but so far we can see what we have been having going on with both those hourlies and the 120 minute chart. Some nice correction there in the slow line, a little bit of the lower high from the overnight session, and just kind of sitting here on our 120 minute moving average. So some nice zones there, if you would, to keep a watch on there as far as our S&Ps go. So that's more or less where we stand there. When we come over to the DAX, though, it's giving us a slightly different feeling, but also because it's on the extended run still to the upside, the consecutive closes on one side of the 5 SMA. And on Tuesday, we actually showcased ourselves a little extra strength because we came back above a visible swing high that we had up there at 15,684. That was the high data test or high data point there from October 12th. So we traded to that point, a little bit above it there on Tuesday, and then yesterday a nice up bar through that zone, so solidifying themselves a bit better through that visible swing high there as far as the DAX goes. So continuing on the extended run, we have that same 15,684 here on the 240-minute display of data. For now, not really showcasing many signs of loss of momentum. What we could be on guard for is if this 120-minute chart is going to give us much that 1, 2, 3 type of pushes up. But for now, we have that feeling on the oscillator, but clearly the market hasn't really backed off very much. So we'll keep a watch on that there in the DAX. 15,684, pretty crucial area there from the daily charts that we essentially blew through on the first attempt up there. So DAX a little bit stronger there than that of our S&Ps. That's a-okay. Then we move along here to that of our euro currency. Also, as we'll start to see going through these markets here, well, for one, let's get rid of this was just to denote our 2-period rate of change high readings that we had there from 2 weeks prior, so don't really need that marked off on our oscillator there. But as we know, EC also had superstar range expansion bar there on Tuesday, a bit of a consolidation bar yesterday, we came close, but did not trade on the other side of that Tuesday high, so we had an inside range bar for the euro currency, so that'll be flagged as ID or inside range day from yesterday. We are a little bit of a ways away, just like our S&Ps from that 5 SMA that comes in at 1.08060, so we're doing a good job of keeping it above that. We did trade on the other side of the previous day's low, but what we have forming here in this euro currency is very large impulse up, prolonged consolidation phase. If you come down to the hourly charts, it'll show up more of like a 2-part wave because we came down, put in a low, and then made a slightly lower low in the overnight session. So more of a complex correction, whether you're looking at the 120-minute or the hourlies. For myself, this actually should be down just a notch lower. I would be still watching this 1.08435 as kind of being a cautious area. Should we, drop back beneath that, we have all this work there, from the Tuesday range expansion that we could certainly do some work with. But for now, I've got to give them credit, for maintaining and holding their ground, especially because they had, 2 separate impulses here on these daily charts that we've been maintaining. This was from 2 Fridays ago, nice impulse up, prolonged consolidation, our range expansion up out of the 3-bar. It still hasn't gotten that test of the previous day's high, so essentially, as opposed to getting major follow through, we've been kind of digesting, as we had done before, the progress that we made from that Tuesday. Nice low to high day that we had. So for now, just sitting here on this 120-minute moving average there as far as the euro currency goes. And drum roll, we have the gold next in the queue here. If we come over to the 120-minute display here for the gold, we can see a slight variation on the theme because the gold has been working with slight more price bar overlap here on these daily charts. We had put in some nice, work, follow through from Tuesday's bar during yesterday's trading. We did not close above the previous day's high, though. We closed right in the core of the previous range. The GC was one where we really had some action unfolding coming into the session yesterday. Recall we had the hourly loss of momentum or sell divergence, which had already resolved, right? We came down, sliced through the moving average, came in and put in nice double bottom or double test. So now we've been kind of playing back and forth. We have a nice boundaries here, if you would. In other words, between this 1977, which is quite a ways up there, right? That's a little extended, and then 1962.8. Using those as 2 general regions for us to perhaps play back and forth between, perhaps put in some better work or range between those 2 zones. So far we have ourselves an inside range bar in the gold from the overnight session. And for myself, just kind of like watching either these hourlies or 120-minute charts just to continue to see how they start to develop here in that of the gold. 1977 above, 1962.8 is kind of being a zone of interest down below there as far as that gold goes. But not too shabby. It's been, opening up a little better as of late. Then we have the crude, and just a heads up here for the crude. It does appear that the volume has shifted into the January series, so CLF 24 there for that crude. So just to mention that there as far as their roll goes. So here with this crude, for one, on the daily charts, we know we had some nice work back below 5 SMA during yesterday's trading, but not enough to get a full retest down or anything on these daily charts. We did some work on the inside pocket. 74.92 is the absolute low that we have looming down below. And what we might want to do here for this crude is start to note these nice cycle low or swing points that we have to work with, just so we can keep an eye, see if they have enough to, muster themselves up some footing. We've already come back up in our testing here, the low from yesterday's bar, so we had some good extension there in the overnight. And so far, what's interesting here with the crude, if we blow this up just a notch, we see that we left a lower low overnight, so we already had that unfold. But now on these hourly charts with the crude, we've come up, after having our movement down, we formed a little continuation pattern, but failed to really make that full retest down on the crude, that 75.89 from the overnight low. So they're trying to do a little holding there. May require some effort, but viewing this 76.80 as kind of being a point of interest, because that would be the point where we came down, failed to make the full test down. So if we were to come back above and start to test that point, 76.80, that would likely generate some additional interest there, in that case of that of the crude. So not a bad view, and once again, this is in the January contract now there for the crude. And as to where we stand on the daily chart, it's going to be very similar to the December contract, just the price figures are going to be slightly different. So all good and well. The dailies in combination there with the hourlies there for the crude. And then last but not least here, before we get into our little Philly Fed morning data point, is that of the bonds. Bonds had some interesting swings yesterday, because we know that they were working on filling in some of the blanks from our superb range expansion bar as well that we had from Tuesday's trading. We did not trade above the previous day's high, so we formed, recall looking at those yields and the 10-year notes, having formed the inside range day during yesterday's trading. So a nice neutral bar. And here on the hourly crude, can give them, they did some partial filling, right, as far as the big single print area. We did not do a complete fill, but what we've been seeing there is just a little counter-reactive lift, so we are trading smack in the middle of yesterday's range there, so we almost have double inside range bars there as far as something like the bonds go. That 115.12 was quite the hurdle there for us those past 2 days. We certainly tested above it on those two separate occasions there, but unable to close above that point. That was the last week's high that we had there in the crude. So as far as the dailies, that's where we stand on this intraday data. You can see, right, filling in the blanks, a little counter-reactive movement, but you blow this up just a little bit more, and you can see that we're starting to fill ourselves out a little bit more of range, not quite that same momentum market that we had seen originally as we were coming up off the low. So doing some back and fill. 114.27 was just a previous cycle reaction high that we had there in the bond, so it's essentially not too far off from where we're trading here currently, which is also kind of the top of where we had this sharp up, and then we came down fairly quickly. So between this 114.01 and 114.27, we haven't really put in that much work through that zone. So sharp up through it, fairly sharp down, back down through it, and then in overnight now we've been putting in a little bit more development throughout that area. So we'll see how that starts to shape up there for those bonds, and not really too dissimilar here on these 10s. They have that same feeling of the inside range bar. So with all that said, let's get this S&P loaded on back up here. We'll see how we shake out there from this morning data point. As far as the hourly charts there, I just have the round number of 4,500, since that's kind of close to that 5 SMA, and then that 45.24 and a quarter there from that range expansion bar that we had up from Tuesday's action. So all good and well. We'll let this run their courses here and see what we got lining up for this day in front of us here.